Hey yo, what's good guys, it's your boy Sabelo here and I'm back again with another banger video for the upcoming week. And I promise you all, if you watch till the very end of this video, you are going to be doubling your account this upcoming week. And in order for you to see exactly what I'm talking about, allow me to take you on a very beautiful journey on these two pairs that I currently have my eyes on for the upcoming week, and I'm going to be giving you a top-down analysis on everything and what are my anticipations as soon as the market opens. Before we jump into the charts, make sure that you subscribe to the channel, you give a thumbs up, and then you leave a comment on videos that you would like me to do next, and I'll definitely be dropping those videos for you. With that being said, let's get into our chart and get to the top of our analysis. Okay guys, so now let's quickly jump into our chart and then I'm going to be giving you the breakdown of these pairs. Okay, so we are going to be looking at two pairs that I have my eyes on for this upcoming week, and then the first pair that we are going to be looking into is USDcad, which is this pair right here. Then we are going to be doing a top-down analysis on it, and then we are going to be moving to our second pair. Okay, so first things first, we would want to switch to a daily time frame, and then once we get to a daily time frame, we are going to get an overall overview, and then always make sure that you are fully zoomed out on each and every time frame that you are currently at, so that you can get the overall perspective of your price action as to how is it flowing in terms of the order flow or the market structure, which direction is it anticipating to go towards. Okay, and then once you get an idea or the sense of the direction of the market at that current price, you'd want to make sure that you highlight your significant levels. Okay, so for us in this case, I personally like to focus on the current price action, and then I adjust as the market also adjusts. Okay, so yeah, this area right here would be our current low, and then this area right here would be our swing high. Okay, so these are the two current significant zones in which the market is moving in between, and then should the market break below this point, and then I'll be looking at where is the next closest point after the market has broken this support structure right here, and then which would be that area, and then I will highlight it at that point. But for now, I like keeping my charts clean, so for now we currently focus on what is currently happening. Okay, and then we see that this market is coming from this support structure, and we are gaining some bullish momentum towards the upside. So where is the next significant level in which the market can react to? And then this would be that level right here. Okay, so now once we have established the two closest significant zones that the market is currently in between, then our next thing that is going to follow our mind is how are we capitalizing from the market moving from here to here, because we can see that previously we had this market pushing from this area towards this support structure, and then from this support structure we can see a huge bullish momentum towards the upside, and then the anticipation is that this market is going to push up until this point at least. Okay, but then if you also look at it from a different perspective, you can also see this potential W formation that is currently occurring right here, and then this market has created for us a what you call a double bottom or equal lows, which is associated with the market that is potentially going to change the trend of the market. Okay, so this will be our neckline, and then once we have broken the structure, we would anticipate this market to push up until this area, and then we can also see we can also see that from here this market has been currently in a downtrend. You can see the structure right here that we have been currently in a downtrend. Okay, And always remember, whenever you're drawing your supports and resistance are not lines, they are zones. So always have that at the back of your mind. So this is the current structure that we have. Okay, so then afterwards, once we've highlighted all of that, we switch to our 4-hour time frame, and then we get a closer perspective as to what exactly is the market doing. Okay, so for now, we're going to remove this. These are not that significant at the current moment for us, for our judgment. Okay, so we can see that we currently have these two zones. Okay, and then this significant zone, which is where we anticipate the market to push after breaking, and then you can see this huge W formation that is potentially occurring right there. Okay, then once that is established, we can see that here on this structure, this market has been respecting this level for quite some time now. You can see that we had a huge bullish momentum towards the upside, and this level held. This market retraced from there, pushed down to the bottom, tried pushing back again, then continued pushing to the downside, and then tried again but failed to break, tried again, failed to break. And then we can potentially see here that we are indeed have broken above this market, since this candlestick will have closed as soon as the market opens. So we'll anticipate that this market is going to push to the upside. And then another supporting confluence towards that concept or that analogy is the fact that here we are seeing a market that is losing bearish momentum and gaining bullish momentum as it is creating lower highs like this. So this is basically telling us that the strength towards the upside is increasing heavily. Okay, so and then after we have broken all of that, at this point I can confidently say that, okay, at this point I'm looking to take a long position or a buy position on USDcad from this current significant zone, at least towards this point. And then once I get confirmation that this area is broken, and then I will be anticipating a further push to that major resistance level right there. Okay, then let's switch to 2 hours time frame and then see what more price action is the market giving us. Okay, so we can clearly see that indeed that this market had a huge momentum towards this structure, which is associated with the market that is potentially going to break that zone, hence why you wouldn't want to execute a sell after seeing such a candlestick. And then after we've waited patiently, we have seen this consolidation here, and then indeed the market started gaining momentum towards the upside. Okay, and then at this point we're basically switching to smaller time frames to see what more can we see. And then yeah, I just transitioned to my 15-minute time frame, which is one of the time frames where I like to take my entries at 15 minutes and 30-minute time frame. Okay, then we can see here this continuation pattern that we had right here, and I love this type of pattern right here. This is how I caught the trade on NZD-JPY, by making use of these patterns right here. So what you can see happening here is impulse, then correction, then what is going to follow is another impulse to the upside. So at this point I'll be looking to take my long trade right here. So I'll wait till the spread adjusts, and then I'll be looking to execute a buy or a long position on this trade like this. That will be my target, which will be the neckline of that huge W formation that you saw in a bigger time frame. Then I would keep my stop loss below, just below this range, as this consolidation phase is being broken by this candlestick right here. We can see clearly closing above this structure. Okay, so that is my analysis on USDcad. And then yeah, you can clearly see we have a very beautiful risk to reward ratio, a 19.3 pips stop loss and 120 pips. That is more than a 1:3 risk to reward ratio. And then yeah, so that is my anticipated analysis when it comes to USDCAD. Okay, and then the next pair that we are going to be looking into for the upcoming week is gbpusd. Okay, before we jump into that analysis, pay attention to how many pairs I have on my watch list. But then I narrowed down my focus for the week to as minimum as I can get when it comes to that upcoming week. Just like this week, I just have my focus on simply 2 pairs. You don't need to trade everything in order for you to make money or become profitable or become consistent. You just need to be disciplined and focus, follow your strategy correctly, and then execute, use proper risk management, and wait for proper price action confirmation. Okay, so yeah, now we are doing our GU analysis. Okay, switch to a daily time frame, make sure that we are fully zoomed up so we can get the entire idea as to what is the price action going, what is the order flow of the market. Okay, so now that we have seen that or gotten the glimpse of it, okay, as I always say, I like focusing on the current market right here. Okay, so I would highlight this as my current swing high. Sorry, and then I also see this area right here. Okay, also see that area right there, and then I see this as being my significant current swing low. This area right here, you can see it being respected here, respected here, respected here. Okay, I do see it as being my significant zone. Okay, and then after highlighting those, you just want to focus on the things that are easy to see on higher time frame. You make sure that you highlight those, and then if you do not see anything anymore, that's it, you move on to a smaller time frame, and then it is going to give you a different perspective into your current instrument that you are looking at that time. Okay, then we switch to 4 hours. 4 hours is going to give us a different perspective or more details inside this market right here. Okay, so now we have established that this area has been our swing high, and then all the way down there I currently have my swing low. Okay, but where or which area is the closest that I would like to consider being my current swing low is this area right here. Okay, so now once we have established that, we can see that the market it came from this support structure, pushed to that resistance level, and then what I always say is that the market simply moves in between 2 structures, and we either capitalize when it changes direction from one of those significant levels, or how is it getting to the next significant level. Then as of this point, definitely see a market that is pushing towards this support structure right here. Okay, what more is going to convince us to the fact that indeed this market is going to push towards this support structure? Okay, so what else can we see here? We can see, okay, now that we had this section right here, okay, which was carrying this bullish movement to the upside. Okay, we can see that this trend line is carrying the bigger price action, and then we can also see that this area is carrying this current one. It's respected this area, pushed up, came back, respected this support structure, push up, and we just simply need a minimum of 2 touches in order for us to consider that a significant level. And then what happens afterwards, it got broken, and then it came back to retest here. Always remember that whether you have a diagonal support or resistance or a horizontal support or resistance, they all have the same principles. Okay, so at this point we're seeing a market that is breaking the structure. Okay, and then we can also make use of our fib level to have another confluence inside this market as to, okay, we know that in order for us to anticipate a market that is going to change direction, we need to see one of these two things: a market that is going to push to the top and then fail to create a higher high, but create an equal high, which will be your M formation, your double top, and then that is the market that is associated with the change of direction from being a bullish trend to being a downtrend. Or another one is going to be a market that is also going to fail to create a higher high, but then it is not going to create an equal high, but instead it's going to create a lower high, something like this. And then that is when price action is telling us that, okay, indeed this market is failing to continue pushing to the upward, but instead it is gaining bearish momentum. Okay, and then if you pay close attention to what is happening here exactly, just zoom out a bit. Okay, you can see that this market has been creating higher highs like this, higher highs, and then all of a sudden, boom, now we have a structure like this whereby we have a lower high, not even an equal high. So this is telling us that, okay, indeed this market is losing momentum to keep pushing this market to the upside. So now we have two confluences. This trend line being broken from support, now it is going to potentially serve as the opposite, which is a resistance. That's confluence number one. And then number two, this market is failing to create higher highs and it is creating lower highs right here. Okay, and then this is going to be the third confluence that I used on this trade. Then the third confluence, as I was saying, the third confluence that we can use here, okay, this would be our fib retracement level. Okay, so we can see that we had this market before. Okay, so we can see now that it created this this move away from this zone. If we look at the current price action, we can't pinpoint exactly as to what transpired to this market, okay, to this market deciding to just all of a sudden start pushing to the downside from this area right here, and then heavy momentum to the downside. Okay, so when you see things like this, you must be very curious at the back of your head. Ask yourself why, what happened. Then what I normally do personally is I would take a horizontal ray that extends to both the left and the right, and I would put it exactly at this point like this. Okay, so when I put it at this point like this and then I zoom out, I check previously on previous interactions at that level with the market, and then I am bound to find a very significant level that once held is a very strong either support or resistance structure. And as you can see here, this was once a very strong support structure up until it got broken here. And then fast forward to the current price action, then this just happens to be exactly where the market just turned and pushed to the downside. Okay, other than that, we can also use a fib level, our fib retracement. You can take it, put it at the start. So this is the this is the movement that we're going to be anticipating a retracement on. So we put it, this would be our start, and then this would be our end. And as you can see, the market just happened to retrace at a very significant zone, which is in between 0.5 and 0.618. There are other levels that are important as well, but this is my favorite level. You know, as much as there are other levels, you tend to get to a point whereby you know what works best for you and what is inclined with your psychology. And as much as other levels are important, I personally do not look at them when I make use of a fib level. This is the only zone or in between levels that I'm highly interested in. Okay, and then after the market retrace from here, we would be targeting this area as our take profits. Okay, reason number one for that is because we are coming from this area, and previously the move was initiated from here and then pushed to the top side. So now we are coming from that zone, so I'm anticipating to get to this level. Okay, reason number two, since this market retraced on this level, which is your 0.618, Then we can also use this Fibonacci tool in order for us to anticipate our take profit. And how we do that is, after we've found a retracement, then now we flip it around and we see the extension. It should be in line with this 0.618, but now since it is an extension, it is going to be at that 1.618 extension. Okay, so and then we flip it around. Okay, what was at the bottom, you simply put it at the top, and then what was at the top, you put it at the bottom, and look at what happens. This extension just so to happens to be right next to this significant area that we were targeting, and that is not coincident right there. That is historical data playing out the very same thing. Okay, so at this point, I now have my top-down analysis. I know exactly what I'm looking for. So now all I need to do is find an entry right here. Then I'll switch to my smallest time frame that I use for execution, which is either 30 minutes or 15 minutes. And then this is where I'll be taking my execution right here. So I will be entering my short here, and then my stop loss just above this range right here of consolidation. So my stop loss will be above here, and you can see we have a 46 pips stop loss, and then this is our target area. Okay, and then we drag it all the way to the downside, and look at that beautiful risk to reward ratio, 46 pips stop loss to a 249 take profit. And all you have to do at this point is execute with proper risk management, and then hold your trade. Be patient, hold your runners, be patient with your trades, and then allow them to get to your TP. And that right there concludes our analysis for the upcoming week. If you found value in the video, make sure that you don't forget to subscribe to the channel, hit the like button, and make sure that you leave a comment. And take advantage of the setup, and then I'll come back the following days with an update as to how it went. And then I would also like to hear your side of this analysis as to how did the market unfold from your side. Okay, with that being said, I'll see you all on the next video.